Hi, welcome to the Market Alert for Thursday, the 3rd of March 2016. And yesterday, crude oil figures were released and they came out worse than expected. 10 million supply. And we see here the market moving lower. And then guess what? Yes, full-blown rigged manipulation sees the Dow turn around and move back to the upside on this bad news, or worse than forecast news, showing that before long, and I forget who said it the other day, but it said before long, it was the head of BP said that before long we'll be filling swimming pools with oil. There's that much around, and yet the price is being rigged. And also when the news is bad, the stock market's then moving higher on it as well. There is no connection now between reality and these markets. There hasn't been for a long time, but now, as you will have seen during the last few weeks, there is absolutely a complete disconnect between the true fundamentals and what the Federal Reserve and the boys on Wall Street want. So here we have a sell signal to begin with. This is actually a profit. For some unknown reason it's not showing there, but I can assure you it was, and I will actually show you on the recorded version. Just one second. So here's the recorded version from yesterday. You can see there the market moving down and this hitting the actual scalp, and then of course the market reversing, putting in another trade to the upside there before the economic news, the crude oil news, which is the red line there, was released into the market. So let's just move back to the completed picture. So the market reacts to the news, and then in the quieter time there we get the market moving lower, giving another trade. If you wanted to actually take this one, at the moment we're still looking at trades within the quieter time, although yesterday was a very narrow range. You can see there barely 100 points between the high and the actual low, and that's because the market's breathing from the previous day. 118 points to be precise, about that range there. So another 20 points there. So 60 point potential scalps there, and then in the evening after the market traded sideways in the quieter period there, it's a very quiet range. That is about 20 points in total. The market then tried to move higher, lost 18 points on this one, and also a losing trade on this one of 28 points if I recall when it took the trade. 28 points loss on that one, as well as the market went sideways. So giving up a few of the profits that were made in the earlier part, having traded through into the evening there, expecting the 3 p.m. New York ramp of prices by the Fed. But of course that isn't required at the moment, because if you have a look at the daily chart, we have a mission accomplished sort of thing going on at the moment, because the market's been moving higher, and particularly from the 24th of February, where prices have moved higher from this point, heading back up towards the January or December highs. So again, it seems like the pattern's slightly changing at the moment, but of course we'll only be able to determine that if we get a down day. Then we'll see them come in and support the market. But at the moment, the market trying to move higher. The next upside target, 16,969, 17,000 is definitely going to be on the cards there. On the news front, let's see if we've got any speakers today. That's all the market seems to be listening to. It's ignoring bad news of any economic type. Unemployment's ISM manufacturing, that's out at 3 p.m. It's high impact. Factory orders 3 p.m. and then MPC Haldane, the man who wants to get rid of cash, is speaking at 5:45. So that's during the quieter part of the market there. And the implied volatility 15.25, down again. You can see the market now moving lower with this. That's great news. So the lower this goes, the better. I would like to see 10% on this. Then we would have a major catastrophe on the stock market, because it just breeds complacency. Everybody thinks everything's fine. This is all engineered to suck in the people who think that the market's going back to the all-time highs, and then they absolutely slam it, make fortunes on the put options that had low premiums. That's how it's worked for the last 20 odd years, if not longer. Zero hedge, interesting here that it seems like central bankers take a truth pill after they've left office. Yesterday it was Greenspan saying that he was worried, and now we've got, again, I mentioned him yesterday, we've got Merv. He's also saying the striking admission by former Bank of England head the European depression was a deliberate act. Of course it was. They haven't got a clue what they're doing, just keep printing money. Thinking that they can print their way out of a problem by printing more debt. It's absolutely ludicrous. The only way they can do that actually is to actually have hyperinflation, so it reduces the value of the debt. But they didn't get what they wanted because the bankers hung on to it and made absolute fortunes from it, and then pumped up the stock market, which now they've got a problem with actually supporting as well to keep the illusion alive, too big to fail, etc., etc. So, yeah, interesting how all of these admissions come out as soon as they leave office. Right, that's it for today. I will see you in tomorrow's edition. As ever, thanks for watching, also for your support. See you in the next one.